Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A third bearish black crow yesterday, with the 50% Fibonacci line for 2023 at 108.64 capping the market. It is still a sixth session. 6 sessions over the bright red highlighted broken upper tine, currently at 108.07 of the late December 2023 to mid-March 2024 bearish shift pitch hawk, as well as the medium moving average, currently at 108.12. However, the market did come down to visit both, if not really test them. Further below are the combined short, medium and long moving averages, currently it's 107.86 for both. Overall, we had a recent break up and out of the bright red bearish shift pitch hawk, though it has not really been exploited, and I'm continuing to wonder if the market will repair it. Further overhead, we have the 50% Fibonacci line, the January 2021 to September 2022 move at 109.44, and a dark blue upper trend line, currently at 109.64 of the mid-April to date ascending expanding wedge pattern. Now, this is quite a steep pattern, and I would thus suggest paying further attention to the 50% Fibonacci line and to the shallow descending neckline extension to the July 2017, November 2018 head and shoulders pattern, which is currently 110.14. So far today, steady and a little higher, basing and moving up and away from the broken bright red upper tine and the medium moving average, and looking like a bullish harami right now. Cable, aka sterling against the US dollar. A second, if higher, indecisive pattern yesterday. This time an indecisive spinning top with a long tongue that reached up and almost to the bright red highlighted July 2021 to date downtrend, currently at 127.74, before reining in. It was nevertheless yet another new recent high. The market is still trying to stabilize over the combined 50% Fibonacci line of the June 2016 to September 2022 move and the September 2020 low. Now they're both at 126.99, closing a little higher this time. Above is the bright red highlighted July 2021 to date downtrend, currently at 127.74, followed by the November 2020 low at 128.52 and the March high at 128.93. Meanwhile below, well, that is the mauve highlighted and flatlining medium moving average, currently at 126.31, with a short medium moving average currently at 125.95, just under that, and the 50% Fibonacci line of the July to October 2023 move nearby at 125.90. Now overall, the market has broken up and out of the early March to mid-May bear channel. This break high has left us a primary target X for this pattern up in the 128 even area, and a secondary harder to reach target X1 up in the 128.95 area. And so far today, well, very little, hanging around a little above yesterday's close. Euro sterling, a sixth bearish black crow yesterday, and an important one. It was the third consecutive close below both the lower purple highlighted trend line, currently at 85.46, of the late January to date expanding wedge pattern, as well as the combined support of the December 2022 low at 85.45 and the December 2023 low at 85.47, plus it was the first penetration and close below, if only just, under the bright red neckline, currently 85.10. This is a significant move, and the question now is whether this move lower will be exploited. The next support below are the lows of mid-March and mid-February between 84.96 to 85.02, and after this, the April 2021 low 84.70. Well, today's action is already interesting as we are capped by the bright red neckline. We were capped by the bright red neckline at the start. We've seen prices test down to support between 84.96 to 85.02. Now, if we stay down here, then I will next look to lay out some potentials below for the break below the purple highlighted expanding wedge pattern. However, it looks very much like prices have started to move back up as they try and repeat what happened in March and February. US dollar against the Japanese yen. A bullish engulfing pattern yesterday, if only just, and also a possible bullish opening white Mariposa with a third consecutive close over the June 1990 high at 155.78 and the first close again over the bright red middle time currently at 156.58 of the July to December 2023 bullish Andrews pitchfork. Overall, we are still in between the purple highlighted middle time above, currently at 160.92, and the lower time below, currently 146.83, of the large February 2022 to January 2023 bullish shift pitchfork. Now, I've also drawn today a more recent mid-March to early May bullish Andrews pitchfork highlighted in dark blue. We're at the moment in between the middle time above, currently at 158.06, and the lower time below, currently at 153.77. The lower time is just above the rising short medium moving average, currently at 153.30. And so far today, well, not much, but it does look like the market may have started basing itself on the bright red middle time. US dollar against the CNH, the offshore Chinese yuan. A bullish white soldier yesterday and a third consecutive close over the mess of moving averages consisting of the short moving average currently at 723.10, the slowly rising short medium moving average currently 723.79, and the important long moving average currently at 723.45, plus the dark blue highlighted upper trendline extension to the January to April ascending triangle. That's currently at 723.96. Now looking above, and we are now well into a congestion area dating from mid-March to late April, between roughly 724 even to 727 even. And so far today, a further appreciation within this 724 even to 727 even congestion area. US dollar against the Mexican peso. A second bullish white soldier yesterday and follow on to the previous session's reactionary key reversal up. Prices base themselves on the neckline extension currently at 1657.87 of the February 2021 to April 2021 head and shoulders top, and were capped once more by the dark blue highlighted middle time currently at 1667.43 of the breached but seemingly repaired December 2023 to January 2024 mildly bearish shift pitchfork. Now just above that we have a new late April to date downtrend currently at 1669.99. Now I have not highlighted this downtrend, not yet, as I suspect it may be part of a much larger pattern, which is a March to date possible diamond pattern, but it is early as yet to verify this idea. Now further above we have the short medium moving average currently at 1675.71. Whilst nearby and below is the 2023 low at 1661.94. We have a further stratified support zone beginning with the December low at 2015 low at 1646.25 going downwards. Overall, the recent declines counter to a large degree last month's monthly key reversal up seen here. So far today, well, supported by the 2023 low and testing the overhead dark blue middle time and also the recently drawn downtrend.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.